Hello, Oracles. Well, Tesla may have fallen 3% in the stock today, but we've got some information leading us to believe that the Model Y is going to be the number one selling vehicle in the world in 2023. And we also have information that FSD version 11 is finally starting to roll out to customers. So we will get into all of that information in just a minute. All right, so looking at the charts here, again, down that 3%. And if you guys take a look at it here, we said that that $180 level is going to be a level of support that we may stop at. Again, we said this on the way down from 313, hit every level. Well, today we bounced perfectly off of 180, closed at 182 just above that. We're going to pay attention to this going forward, but we are now starting this downward trend. Will this continue? Well, if we take a look at the lines of Gort, if you do not follow him over on Twitter, I highly recommend it. So, taking a look at the lines that we've got drawn here, look at all these downward channels, upward channels, downward channels, upward channels. And currently, right now, we are looking at this downward channel about to form. So, are we going to hit this line here and bounce off, or are we going to break through that and fall further? So, again, don't know on this level, but just looking at how this pattern has played out over and over again, chances are we are going to continue falling from here. And now you may be asking, why will we fall further? You just said that looks like the Model Y is going to be the number one selling vehicle in the world this year. We have FSD version 11 about to roll out. You have to look at the bigger picture. You have to look at the fact that the macro environment right now, we are in a position where Jerome Powell just come out and said we might actually be going higher with rates than expected. We've got Open Skies tweeting 6% terminal is almost consensus now. Something will break. So right now we're looking at the Fed is on a median level looking at a potential 575 to 600 basis point rate that we need to get to. Previously, it was 5 to 5.25. So that is a massive jump. I was thinking that maybe they were going to jump to 5.25 to 5.5. Well, now they're up to 575 to 6. So this is just telling us that inflation is stickier than expected. And based upon some other information that Jerome Powell shared, looks like they're looking to kind of push the economy to get back to 4.6% unemployment, which is a significant jump from where we are right now, but it might be necessary to kind of cool everything off. With that said, last time that happened and we've pushed up over 1% in unemployment, it has actually gone well past that. So we might be looking at a 5.5 to 6% unemployment coming up in the future. When we start looking at numbers like that, that is anticipating a massive housing crash with people having to foreclose on their homes. We are looking at potential massive credit card debt going up even higher than it is already climbing right now. That there is going to end up causing a massive crash in a lot of things because people aren't going to have the money. Now, again, I don't know if this is going to happen. This is clearly not what the Fed's intention is, but looking at historical data, looking at the direction that we are heading, that is a potential to keep on the radar for the future. So just monitoring all of this, seeing what's going on, this could explain some of what's happening with Tesla stock. And now, as we had discussed before as well, Tesla had outperformed the market significantly for a little while there, for about a month and a half to 2 months. There was a lot of options that were getting pushed in there. We don't know how much margin people were on at that point, but seeing a massive 90 to 100% run up in the stock, people were bound to be taking profits, especially knowing that we have this stuff going on in the macro environment. Now, again, some people are just long term holders. They're just going to DCA all the way through this. Should be perfectly fine. I am one who is also going to be doing that. You guys know my strategy. For those of you guys who are new, I do add money every single day into Tesla. I put $20 in every day, but I also put $50 every single week into cash. So I'm saving that cash because I am anticipating this pullback so that when we get down to lower levels, I'll add either more on a daily basis and then add a larger chunk at a lower level. I'm just going to kind of monitor the charts for right now, but as soon as I determine what those levels are, I will let you know. I do have a buy-in in my IRA for $125 currently, and I'll just monitor from there to see if I'm going to add another buy a little bit higher or a little bit lower. But I have a lot of cash saved up on that side as well, anticipating this pullback. And so now, if we couple this information with what we learned last week with Adam when it comes to the Fed rates, we could continue to see this pullback as the Fed goes up on their rates. Then, when the Fed pauses, we could see a very strong rally until the Fed decides to pivot. Now, the Fed has told us that they do anticipate holding the rates high for an extended period of time. That could be up to a year. So we might see a nice rally for about a year or so. But then don't forget that the market is forward looking. So hard to time exactly when it's going to happen. But historically, when the Fed pauses, we see a rally. When the Fed pivots, we see a massive crash. That timing of the crash could be coming when we see the recession happening in the market due to unemployment going up, due to the housing market coming down. A lot of these dominoes start toppling. Again, we're just going to pay attention to this going forward, but even Jerome Powell said the rate increase is going to be dependent on the data that we get. And we're going to be getting non-farm payrolls this Friday. So there's a lot of data that's going to be coming in because we have that. Then on the 14th, we have CPI, 15th, we have PPI, then the FOMC meeting on the 20th and 21st. And then the PCE, which is the Fed's favorite inflationary data to go by, that comes out on the 31st after the FOMC meeting. And then we have another month before we end up getting to the next FOMC meeting in May. A lot is going on in the macro environment. So when we're looking at Tesla stock specifically, we have to understand it also has a beta of 2. So it's going to swing twice as much as the broader market is anyway. Just pay attention to these things. Again, we've already spoken about it numerous times before. It's going to be a wild ride, most likely. We're going to see big swings up and down in the stock price, most likely. We're starting to see that pullback now, and I'm anticipating it's going to continue coming down. So we'll just pay attention to this as we go forward. But on that fundamental level that we were talking about, we've got Sawyer Merritt tweeting out that he made a chart of the top 10 best-selling passenger cars worldwide in 2022 in units. Model Y was the only vehicle in the top 6 to actually grow its sales in 2022, up 88% year over year. Expected to be number 1 worldwide in terms of both revenue and unit sales in 2023. And so he breaks down all the vehicles. We have the Corolla at 1.12 million, the RAV4 at 870,000, the Ford F-Series at 790,000, and then the Model Y at 760,000. And of course, as Elon has told us before, he anticipates that the Model Y will become the best-selling vehicle in the world, and most likely it's going to be happening this year. That has been their focus. That is what they've been driving. That's why Austin and Berlin have focused solely on the Model Y to be able to get that out there to the masses. This is most likely what's going to happen. If that's the case, that means that we are most likely going to be seeing more than 1 million Model Ys getting sold in 2023 alone. That's huge. Now, looking at the forecast that I have, my production numbers have gone up to just over 2 million vehicles for the entire year for production. I have a feeling that we might see deliveries right around that same number. I initially had 1.8 million, which is what Tesla had forecast for. But looking at these numbers and the data that's coming in, we might be seeing 1.9 to 2 million vehicles getting sold overall for Tesla as a company in 2023. And if that's the case, that means that the Model Y is going to be making up half of all of those deliveries. And now for the news that so many people have been waiting 2 weeks to finally get. Rob Maurer from Tesla Podcast tweets out, FSD beta version 11 has started to roll out to customers, and Tesla has included fixes for all items in the recent over-the-air recall. It's a big day. So again, I know Elon kept saying next week, next week. Elon actually said that February of last year we were going to see single stack version 11 come out, and here we are just over a year later. So his 2 weeks is about 379 days. So here we are about 1 year later, now finally getting version 11 getting rolled out, and it is fixing that recall issue that is just the over-the-air update that is now resolved. So all of this is fixed, coming out. So if any of you guys get version 11, please share with us your feedback on that. So I'm sure we're going to see plenty of videos out there as well. But if you guys have it and you're lucky enough to get it this early, please share your feedback in the comments. So that's all I've got for you guys. Again, pay attention to the fundamentals of what's going on. Going back to what Elon had told us before, going into recessionary times like we may be seeing, there could be a massive disconnect in stock prices. This could be an amazing buying opportunity. This is why they always say that fortunes are born during bear markets. And while we did see the bear market happen last year, we could potentially be seeing something even more significant in 2024. Fundamentals are growing, but the stock price is falling. And I have a feeling while we thought the disconnect was bad last year, it might actually be worse next year. And again, that is a prime buying opportunity, in my opinion. So, not financial advice, but I am taking this day by day, just kind of paying attention to the data that we have, but saving up this cash because I think we're going to get some significant buying opportunities. And if anybody missed opportunities last year, we might actually get even better ones next year. Again, I don't know for sure, but that is what I'm seeing currently right now. So I'm preparing for that, but I don't know if it's going to happen. So again, that's why I still add every single day. Now, again, my plan, you guys need to do your own due diligence and research and do what is right for your own portfolio and risk tolerance. But I think there's going to be some great opportunities coming up, and I want to take advantage of them. Thank you all so much for watching. I appreciate all of your support. Have a great one.